At last, let's start doing some computations. That is what we all like. We don't like all this theory rubbish, but we have to do that, unfortunately. Mrs. Blue started a small paint business, New Blue Traders, on 1 July X0. During the month of July, the following transactions took place. Okay, now what are you required to do? Record the above transactions under the accounting equation. Now, usually if we ask you to do that in a test, then we will give you the format that you have to follow in order to answer the question. So I will tell you, for instance, the format is as follows. Assets, and under assets, plus minus, equals equity with a plus and a minus column, plus liabilities with a plus and a minus column. Or I can tell you, look, I want to see assets, debit and credit equals equity, debit and credit, plus liabilities, debit and credit. Now in this question, they don't give you the format, so basically as long as you've shown it into the accounting equation, it would have been fine. But in a test and exam, like I said, please follow the instructions. Now in this one, I've answered the following, in the following format. I said equity equals assets less liabilities. So be very careful what you're going to say where. So equity equals assets less liabilities. Remember that here is an equal sign. There somewhere, there's an equal sign. And there must be assets less liabilities. So what happens on this side, that should equal what happened on that side. So let's insert here for ourselves, just as a reminder, a little arrow. So what happens there, that one, should be the same as what happens on the other side. And the other side being this side here. Okay. Ooh. Okay, let's start then with the first one there. So remember, our equal sign is here. There is an equal sign. And what is here? On this side here, it is assets less liabilities. Minus. Okay. Good. So let's start with the first transaction that happens. The assets, equity equals assets less liabilities. The first transaction says, Mrs. Blue deposited 30,000 Rand in a bank account in the name of the business. She obtained a long-term loan of 15,000 Rand from her rich aunt. Interest would be payable monthly at the rate of 12,000 Rand per annum. Repayment terms were not set. Okay, now here are three transactions in this first bullet here. The first one is the 30,000 Rand that she deposited into a bank account. So that was her capital contribution. If I go back to my equation here, my capital would have increased, so it's a credit against capital of 30,000. Please note the statement indication. Capital, statement of financial position, credited 30,000, and I would have debited bank, statement of financial position, their debit, and the assets, bank, 30,000 Rand. Then the next transaction that happened is that she received a loan from her aunt. It doesn't matter who's the third party. The fact is she received a loan. So what happens is bank was increased with 15,000 Rand. Debit bank, statement of financial position, a debit against assets, 15,000 Rand. And it was a loan. So loan, 15,000 Rand. Right. The loan is a liability. If the liability increases, I have to credit that. Now, the other transaction that I referred to is the interest, but obviously we are now at the first of the month. So on the 31st of July, we will have to account for the interest. And that would have been 15,000 multiplied by 12% multiplied by 1 month. It's only 1 month that has gone past. Oops, there's no C there. And how much is that going to be? So at the end of the month, we have to account for that interest that she was committed to pay on a monthly basis. So we will see whether she did pay it, whether she didn't pay it. But if she didn't pay it, then it means that we have to make provision for that as at 31st of July. Great. On the 3rd, what happened on the 3rd? She signed a 3-year lease for office premises with an annual rental of 12,000 Rand. So 12,000 divided by 12 gives us 1,000 Rand per month. She paid a deposit of 1,000 Rand and 3 months rent in advance to secure the premises. So how much did she pay? She paid a deposit of 1,000 Rand and then she paid 3 months worth of rent of 3,000 Rand per month, of 1,000 Rand per month. So in total 3,000 Rand. So the total that she has paid is again now 1,000 plus 3,000 equals 4,000. That 4,000 Rand that she paid, 1,000 Rand is a deposit. So what is a deposit? A deposit is something that I place with an entity, but I have the right to receive it back somewhere in future if I met all the commitments that I was supposed to meet. So in this case, if she leaves the premises in a good position and there's no damages to the property done and things like that, she will receive 1,000 Rand back. So that 1,000 Rand can never ever be an expense because she has the right on future economic benefits that will flow to her. So it's an economic resource that she's going to receive future economic benefits out of. And she has a right on that 1,000 Rand to receive it back in the future. So that is an asset. That deposit is an asset. Now the 3 months rent, remember you always pay rent in advance. So you're always supposed to pay in the beginning of the month for the month that's lying ahead. So the first 1,000 Rand that she's paid is for the month of July. So I can recognize 1,000 Rand as an expense for this month. But the other 2,000 of the 3,000 Rand is the rent for the months of August and September. So I want to defer the other 2,000 Rand worth of rent. So the first thing that happens is that she paid out of her bank account 4,000 Rand. So her assets, the bank account was credited with 4,000 Rand, which has actually decreased the assets with that amount. 1,000 Rand was a deposit. So a deposit, we say to each other, is also an asset because she may receive it back somewhere in the future. So deposit, statement of financial position, increase of assets, debit against assets, 1,000 Rand. We said that 1,000 Rand for the July rent, she should recognize as an expense. An expense is a debit and it reduces equity. So rental expense, statement of profit or loss or net profit or loss, 1,000 Rand. The balancing amount of 2,000 Rand, i.e. the rent for August and September, is a prepaid expense. Prepaid expenses, statement of financial position, which is also asset debit that she has to create, of 2,000 Rand. So now we've accounted for the total transaction that took place. On the 4th, she employed an assistant helpful at an agreed salary of 1,500 Rand per month, and she should be paid on the 25th of each month. Now, you never receive your salary in advance, so you have to wait until the 25th of the month before you're going to pay the salary, and then we will recognize the expense. So for the 4th, we're not going to do anything. On the 5th, purchase paint for cash at 2,750 Rand from paint wholesalers. Now remember, we are a paint business. So what is paint then? Paint is then a commodity that we trade in. So that is our inventory figure. We paid it for cash. So therefore what happens is we debited trading inventory, statement of financial position, 2,750, and we credited bank 2,750. A debit against assets and a credit against assets. Our asset inventory increased, but our asset bank has decreased. Then on the 6th, we bought office supplies, stationery for 750 Rand on account from pen and pencil. So stationery we bought on credit from pen and pencil. Now, let's treat the stationery here as inventory. 750 Rand, and creditors, which is a liability, is going to be credited with 750 Rand. So we're going to debit stationery account and asset account 750, and we're going to credit liabilities, the creditors account for 750. We could have, and listen now carefully to me, we could have put that 750 Rand not as an asset but as a stationery expense account. And we could have put that 750 Rand on the debit side of the equity account as well. You will see in the question at the end of the month we're going to take a stock take of stationery. And then we will need an adjustment entry in any event. So you could either have debited an inventory account stationery, which is an asset account 750 Rand, or you could have debited an expense account stationery 750 Rand. Both of them will be correct. Stationery, statement of profit or loss. Then what happens on the 7th, we bought paint, which is again our inventory on credit from Paint Galore for 6,200 Rand. So our inventory, trading inventory, statement of financial position, under assets on the debit side 6,200, and creditors, we bought it on its credit. Under our liabilities on the credit side, it will increase our liabilities with 6,200 Rand. Purchased office furniture at an auction for 3,300 Rand cash. So our furniture account, statement of financial position, it's an asset. That would have increased with 3,300 Rand. And bank, we bought it for cash. So our asset account bank would have been credited with that 3,300 Rand. Sold paint for 800 Rand cash to Mr. Fixit. The cost of that paint was 600 Rand. Now remember, this is a perpetual inventory system, so therefore we have to adjust our inventory account with each and every transaction that has an impact on inventory. So the first thing that we've done is a sales transaction. So let's do that first. It is for cash, so our bank has increased with 800 Rand and we have earned sales revenue of 800 Rand. So bank, asset, debit increased 800 Rand, equity, income, sales, profit or loss 800 Rand. That inventory costed us 600 Rand. So we have to adjust our inventory figure. We don't have inventory worth 600 Rand anymore, so therefore we're going to reduce our inventory account 600 Rand, trading inventory, credit is going to decrease our asset. And we're going to create an expense account, cost of sales, profit or loss, which is an expense account, so debit entry, so it's going to reduce our equity 600 Rand. Guys, how much profit did we realize on this transaction? We sold inventory for 800 Rand, that inventory costed 600 Rand. So we made a profit of 200 Rand. Income 800, less expenses 600. So the net impact is a profit of 200 Rand. So there's a net increase of 200 Rand on our equity figure. Purchased a second-hand delivery vehicle from Trusty Motors for 7,500 Rand and we paid 1,650 Rand as a deposit. Now this deposit, am I ever going to receive it back? No. What is that deposit? That deposit is a down payment on the amount that we owe Trusty Motors for this vehicle. What is the value of the vehicle? The value of the vehicle is 750 Rand. the remainder of the amount outstanding, i.e. the 7,500 less the 1,650 Rand, is going to be repaid in installments over the next 3 months. So 7,500 less 1,650 gives us a remainder of 5,850. So that we're going to pay back over the next 3 months. Great. So the first thing what happened is that we have increased our assets named delivery vehicles with 7,500. So we're going to debit vehicles with a value of the vehicle, 7,500 Rand. How much was our cash outflow? Our cash outflow, i.e. our asset bank, is going to decrease with 1,650 Rand. But we still owe the remaining amount of 5,850 Rand to Trustee Motors, so that is a liability for us. Our liabilities have increased with 5,850. So vehicles asset increased 7,500. Bank asset has decreased with 1,650 Rand. And then we have an unavoidable commitment liability of 5,850 Rand, the amount that we still owe Trustee Motors. So our liabilities have increased on the credit side with a 5,850. So assets has decreased with 5,850. Liabilities has increased with 5,850. So the impact on equity equals 0. Made sales on credit to Hardy Limited for 3,740 Rand for paint that cost us 2,900 Rand. So the first important thing is that it is a credit sales transaction. And then we have to adjust our inventory figure with a cost price of paint sold, which is 2,900 Rand. So let's do the sales transaction first. He didn't pay us, so we can't debit bank. So we have to create a debtor for the amount of 3,740, and then we can recognize the full amount as income because the income was earned when the transaction was concluded. So debtors will be debited with the amount that they owe us, 3,740 Rand, and sales, statement of profit or loss, equity, credited with 3,740. This is the sales transaction that we have recorded. The cost of sales was 2,900 Rand. So we don't have inventory of 2,900 Rand anymore, so we have to reduce our asset trading inventory statement of financial position on the credit side, 2,900, and we have to create an expense account. We don't have it anymore. We have sold it, so we're going to debit equity. It's an expense account, cost of sales, profit or loss, 2,900 Rand. How much profit did we make on this transaction? We made a profit of income was 3,740. Expenses is 2,900. So the net profit on this transaction was 840 Rand. And the credits are more than the debit, so therefore we know that our equity has increased in net with this transaction with 840 Rand, which is the net profit on that specific transaction that took place. On the 20th, bank cash sales for the day 2,800 Rand. So cash, that means our bank account has increased with 2,800 and our sales revenue has increased with 2,800. We are working with a perpetual inventory system, so therefore we have to adjust our inventory record with a cost price of goods sold. So our inventory would be credited with 2,200 and cost of sales would be debited with 2,200. Bank asset debit increased 2,800, sales revenue equity increase 2,800. Cost of sales asset inventory decreases with 2,800 credit and cost of sales and expense account decreased equity. Debit there, decreased equity was 2,200. What was our net profit on that transaction? 600 Rand. So the net increase of this transaction on equity was a total of 600 Rand. We also paid motor vehicle expenses of 300 Rand to a university friend, Jake, who gave the car a service. So obviously our bank asset has decreased, credited with 300 Rand, and it was a service that he provided to us, so therefore an expense account, repairs and maintenance, profit or loss, debit, which will reduce equity because it's a debit against equity of 300 Rand. Now we pay a helpful salary for the month. Remember, we have employed salary, helpful here in the beginning of the month at 1,500 Rand. So now at the 25th, we are going to pay her a salary. So salaries, an expense account was for a service that she provided, 1,500 Rand, an expense increases. If an expense increases, equity decreases because it's a debit against equity. And then bank would be credited. Our asset account bank has reduced with the money that we paid helpful. Receive the money due from Hardy Limited. Remember, we made here credit sales of 3,740 Rand to Hardy Limited. Now remember here, we only received the outstanding amount. When we created this initial transaction, we debited debtors and we credited revenue. We cannot credit revenue again, we've already done so. The only thing that happens now is that Hardy is actually paying his outstanding account. So therefore, bank, we received the money, is going to increase the debit against assets with 3,740 Rand. And another asset account called debtors, statement of financial position, is going to be credited, is going to decrease our assets with 3,740 Rand. So our one asset account bank increased and our debtors account asset has decreased. Paid 4,000 Rand to Pine Color in part settlement of the amount owing to them. Remember, we bought paint from Pine Color for 6,200 Rand on credit. So now we're going to pay them 4,000 Rand, not the full amount, only part of the amount. So creditors is going to reduce, so therefore it's a debit against liabilities of 4,000 Rand. And bank, an asset account, is also going to decrease with 4,000 Rand for the amount that we've paid. Now we're going to pay Mrs. Blue's aunt the interest. We've already worked out the interest. It was 150 Rand that we have to pay her. So it is an expense account interest, profit or loss against equity, a debit which is going to decrease equity 150 Rand, and then bank is going to be credited with 150 Rand. Then the last transaction, office supplies on hand, 500 Rand. Now remember initially when we actually transacted that 750 Rand, we actually debited an inventory account with the 750 Rand. We have used 250 Rand of that 750 Rand because we still have on hand at the end of the day 500 Rand of this inventory. So we cannot show an asset of 750 Rand, we can only show an asset of 500 Rand at month end. Therefore, we have to reduce our asset with 250 Rand, and that will then equate to the stationery that we've used during the month, which is an expense account, 250 Rand. But remember what I've told you here. I said, well, if you didn't debit the inventory account, you could have debited an expense account. If you follow this route, it means how much did we use in the current month? We've used only 250 Rand worth of stationery. So if you follow this route, you are now going to credit your equity with 250 Rand, or with 500 Rand, sorry, to show an expense of 250 Rand, and then you would have debited your asset account with the amount for inventory on hand at the end of the month. So stationary equity, you would have credited then with 500 Rand and you would have debited an asset account with 500 Rand.